All right, good afternoon to you as well. Just something on BuzzFeed. Sam says, BuzzFeed, I'm buying options and shares. Rules listed company 30 days before pinch it, so almost 3 months. Still under $1, still NASDAQ. What's the ticker of BuzzFeed? If it is under $1 and still on NASDAQ, they might receive a notice from NASDAQ pretty soon to get delisted. So be careful from that point. I don't know. I've never traded BuzzFeed. Too small for me, maybe. BZFD. Let's pull up BuzzFeed. $83 million market cap. Not an area where I generally look at. I know this. I think this spike was because of their news around AI. In November and December, especially in November, when ChatGPT came out from OpenAI, everyone was like trying to add AI in their business. BuzzFeed did that too, and we saw a huge jump in BuzzFeed. But yeah, that was like we always see when any new tech comes out, you will see these pump and dumps kind of a stuff. So I consider that into the same category. I'm not interested. From a business side, if you look at $436 million of sale and losing $201 million, so they're spending $1.50 to earn $1. I don't know how it makes sense. It's not that they are building a new tech or anything. It's a content provider. For Christ's sake, they are not doing anything which could change the world. So anyway, I don't know. I'm not really interested in this one. It could be just a speculative play, gambling play. Your Vegas chips. That's all it could be for now. Beyond that, nah, I'm not going to play this one. There are so many other stocks to play in the market. What's the point on going on these things, which especially for me, I mean, this is very speculative. Cool. And even BuzzFeed news change online journal. Yeah, but it's past its prime. I do understand where it came from, but looking at what's been happening to many of these companies over the last few years, not much. All right, anyone else did anything different? How did the week treat you? Overall, this was a big week, right? It was a lot of tech earnings. Only thing that surprised me was generally we see the earnings come when Amazon reports earning, when Microsoft reports earning. We also see in the same week Apple reporting earning. But this week Apple didn't come out for earning. I don't know what happened. Was it, let me just see, was it supposed to report this week and they did not? Or did they move it out? No, they are not even supposed to report this week. So when is Apple supposed to report? Come on. Oh, it is actually on 4th. Okay, so next Thursday. So this was, and I saw a few even financial publications. They had their own standard template of reporting, and one of them actually mentioned, this week was a big week in earning, and they also included Apple as reporting. I'm like, no, Apple did not report it this week. So anyway, even without Apple, this was indeed a big week for earnings, and I do want to spend some time in going through earnings for Amazon, Meta, Facebook for me, Microsoft, and Alphabet. Those are the 4 big companies. I think that's what we'll do today. I'll also spend a little bit time on Palantir. I think I did mention it in our previous, maybe last week or week prior to that, around Palantir also jumping onto the bandwagon of AI and coming up with their AI. They mentioned that they will have their AI platform available starting May. So there was one video. I have not seen the video yet, but I think they did release a video introducing their AI platform. So we'll watch it together. Hope that's not too big and boring. What else? Saw Apple jumping into banking foray. They announced savings account with more than 4%, 4.15%. That was interesting. With the help of Goldman. I don't know at this point of time, does Apple need Goldman or does Goldman Sachs need Apple? What do you guys think? Goldman Sachs has been trying to get into consumer banking. In fact, they had their whole big offering of Marcus. Really didn't work out. The reason they got, pummeled this earnings season because their consumer banking really didn't pan out, and they're now trying to. They are just taking loss and probably writing off their consumer business. Only thing that might work out, maybe Apple could save Goldman Sachs. So we'll see how does that go. But Apple offering more than 4% on your savings account, it's a big news. Dave says, Amazon took me for a ride. What, did you have a short calls on Amazon? Dave? So, okay, Mark says, I lost some money on Amazon having sold calls at 105. Okay, so Dave, you are long on Amazon. Amazon, I think Amazon had a very, I would say, it was a pendulum swing, because after they announced the earnings, immediately after announcing of earnings, the stock was up like 10, 11%. I had a June expiration strangle with, I think, 95 and 120 as a short strike. So 95 as a short put and 120 as a short call. It was a covered. So really, I mean, it wasn't a naked one. So it was a covered, I would say covered strangle. And it went up, 10%. It was almost near 120. And then the next day it fell down. In any way, I closed my strangle and took profits. But we will go through Amazon. I did not see anything that is of a big concern. It's just one statement coming from the one statement from CFO that caused the market to just reverse the course on Amazon. But in the long term, that doesn't matter. I missed QQQ 10% rise. Yeah, Qs have performed very nicely. And this is why I hate getting out of the markets, because we never know when things will move. And the best moves generally come, the best upside moves in the markets will generally come after the worst downside moves, right? So QQQ, for those who are keeping the numbers, it's up to almost 22% for the year. 22%. And here we've been talking about recessions and all that. And even SPX is up almost 9%. So that's why it just make no sense to change our investing strategy because something happened on a day. What else? But Steve, if you think you missed the ride, the ride could be even much longer. It all depends on how long were you thinking from your investment perspective, right? I thought I missed the ride on Mercado Libre when it went from 350 to $600, and I was like, gosh, I should have invested more in it. Today it is at what, 1,200? So we always think we miss the ride or miss the boat, but it all depends on if I'm looking for next 1 month or I'm looking for next 10 years. The ride may be just starting, who knows? So it all depends on what the business is, and overall, how long is your outlook? So miss the 10% rise? Probably not. I mean, there is a lot more to come. Dave says, quite happy Thursday post ER bubble bursted Friday morning. I mean, overall, I think NASDAQ finished the month almost neutral. Right? So this is, and but still for year to date, still up 20%. I don't think, at least from my perspective, Friday, I don't call it all busted. Yeah, I mean, a lot of these companies reverse their gains, what we saw post earnings. What was also interesting to see that even on the tech, not all tech is the same, right? There are companies even in the same sector, which had completely different market reactions after earnings, right? And as is we have talked about in our previous sessions also, especially in 2023, the big ones are becoming bigger and better, whether it is banking or whether it is tech. All the gains in the tech or QQQ, most of the gains are driven by these big tech companies, Meta, Apple, Amazon's. So if you look at, we looked at QQQ was up 22%. Meta is up 93% for the year. And it's a freaking, very big mega cap stock. So movement in Meta makes a lot of difference to overall index. What is Amazon? I don't think Amazon has done too much. Still 23%, right? Microsoft, 28% year to date. So majority of the gains have come from these big ones. One reason could be they have a multiple sources of revenue, like Microsoft, Amazon, etc. Smaller ones. This week we also had two other companies reporting, Snap and Pinterest, right? And those were decimated. Snap was down, closed down, 17%. Other was Pinterest closed down almost 16%, right? And all the gains were taken by the likes of Meta if we talk about those social media companies. So big ones becoming better, big ones becoming bigger. Same thing in the financial industry, in the banks. Smaller banks are still reeling from the whole crunch that started with Silicon Valley Bank, and the big ones are enjoying the fruits of that. So that's my feel on big is becoming too big to fail now. Apple is Thursday. Yep. Steve, David didn't burst during the day, went up 5%, go down 3%. CMG knocked them all. Yes, I did hear about CMG. Gosh, this is one stock which is in my same list of that, hey, I missed the ride. First time when I looked at CMG and I did not have enough courage to, I did not study it really well and did not have the courage to pull the plug, was when they had the rat incident and the stock was down to $250. I think that prior to that that health hazard incident, it used to trade at maybe $550 or something like that. And then it traded down all the way. It was down to $250 and I didn't pull the plug. Maybe I think I didn't like burritos that much at that point of time, but clearly I think Americans love their burritos. And I saw a comment whether it is a fake burrito, but they've done exceptionally well. And this company has been increasing the prices. You go there, you try to pay. They have been since pandemic, everything is up almost at least 20%. They have the pricing power. They have been increasing the total number of restaurants that they have, and that shows up in number. Right? Last I heard that, who's the CEO? I think Brian Nickel. I don't own the shares, so I have not taken note of who the CEO is. But if my memory serves me right, It is Brian Nickel or something. Yes, Brian Nickel. Last I heard that he is looking to, make have almost 7,000 Chipotle outlets, which is will become a huge chain. Yeah, this is something which I sometimes feel, oh, did I miss the boat? I felt it the same way when it became from 250, reached 1,000, and then 1,500, and now 2,000. Yeah, I haven't pulled the plug yet. I do have in my portfolio, I do have now a seat available for a new ticker to be added to my portfolio, new individual stock ticker to be added to my portfolio. As you guys know, I have not added any individual stock, a new ticker in portfolio, I think since the start of 2022. So now I do have a space. Maybe I'll look at CMG, but there are few other stocks on the watch list. CMG is one. CMG could be. Service now is another one. I don't know which one I'll pick up. Or maybe I just won't add anything to my portfolio yet. But we'll see. Any proud owners of CMG? Who loves your burritos here? Let me see other comments. Amazon was 122 Thursday. Yeah, that was the time when I was looking at, should I take I had enough time on my hand for the strangle, because my short strike was 120. I was willing to hold it. When it was 122, maybe it come back down. But anyway, so it happened, and I, closed at my profit target. We'll wait and maybe do another one. All right. Mark had covered calls. I had covered strangle. Steve, I don't understand why people here like to eat fake Mexican burritos. Right? Taste palettes are different. Dave, I took profits on 500 shares Wednesday afternoon. Cost basis 98. Thursday was just FOMO. Spotify may substitute for Mercado. Not really sure. Spotify and Mercado. In Mark's portfolio, what I read is that the tech giants were up due to improved OPEX from the massive layoffs. So my reading was it was better than expected. Oh, sorry, better than feared earnings. Right? Of course, the OPEX had improved across the tech giants. We saw that the common theme was efficiency and cost cutting. Efficiency and cost cutting. Meta did the same. Amazon came and did the same. Alphabet, I think Alphabet didn't stress that much on operating margins or efficiency, but clearly even if we ignore the margins side, just the revenue side we saw was better than expected, or I would say better than feared. Right? I think that was the overall theme. Even though the growth rate is less than what was the prior year, but the expectations were even worse. So that was the case. Apple is going tricky because it's FOMC next week, but over the last few quarters, I think FOMC always delivers, or have been. No, I shouldn't say. I don't think I should say anytime always. FOMC has been mostly delivering what the market is already expecting. So right now, market has already priced in 25 basis points hike in May. Let's see, maybe we'll get that. And that's already priced in. What could happen is, I think not the actual increase, but what comes out from the press conference, right? Did Jerome Powell wink his eyes? Did he slur? Did he bite his nails? How forceful did he say that Fed will be data dependent? All those unspoken cues could determine what market might think about Fed's next moves. But Apple is Apple. I don't think much of a difference. Any reaction to Fed is going to be temporary for these big companies anyway. Ramesh, he came from Taco Bell. Yes. So I think that's your question on Brian Nicol. Yes, he did indeed. And when Chipotle wasn't doing that great, and I think the founder was a CEO at that point of a time, and he had a different ideas of running Chipotle, probably better for consumers because, and I forgot the name of the gentleman who was a founder and CEO of the Chipotle at that point of a time. But he wanted to focus more on healthier ingredients and more organic one. But then for a corporate, it hits your margins, and then they were looking to find someone who has turned around a similar fast food restaurant, and Brian Nicol had done a wonderful job in Taco Bell, in a different, in changing the whole messaging around Taco Bell. So they got Brian Nicol, and so far he has proven his worth. I don't know how much are they paying him, but whatever. The stock is up at least 4 or 5 times since he joined, multiples. So he's proven his worth. Mark says, when you say pick up, you mean take a long position or buy right? Oh, geez, I even lost. When did I say what was a pick up? So I would have said I had picked up. Yeah, so I will talk about in terms of I was thinking of service now. Yeah, so when I say I have a spot for another stock, I am saying adding a long stock position. Options position I have always on. When I mean, there's hardly a day when I probably won't do one or two, put an option trade. But when I say I will pick up some stock, means get my initial stock, hold a stock position, and then I'll start to do put spread or short puts, or do a put spread and a covered call, add those multiple different option strategies. Right? So I've not added a new ticker in my portfolios in individual stock. I think this year I added XLI to my portfolio. I added XLV, but both of them are ETFs. So I've been very conscious in terms of adding a new stock on my portfolio, but I do have a space to add one more because I sold something on my retirement account, so to make a space to pick something new. So Kay spoke of adding text last Sunday, but he's pretty happy this week. Yeah, if you just added last Sunday, great. But yeah, I've been adding text. Tech have been a most part of my portfolio. Oh, by the way, today is our first session after a completion of a month, so you will get to see my portfolio anyway. So we'll see what I hold. Mark Senior has a fusion burrito that you might enjoy. All right. I'm not a big burrito guy. I generally go there and have a bowl in Chipotle. By the way, I have contributed to these gains of Chipotle. This week, even MDB went up 29. I don't think Apple is going to pop like that. So MDB, I guess, is MongoDB. It's been a mixed bag for, I think these are little smaller mid-cap size companies. Probably MDB up is 29. We saw Cloudflare tanking 20%. So I'm a little cautious on these one, single solution companies, because depending on what worked at that quarter, you could see those huge volatility in that stocks. Mark says, when I buy, I usually write a cash covered put instead of just buying. Yeah, that's also, it's a perfectly right way to do it, Mark. Just that I generally will pick up very small portion of that ticker to begin with. Might be just 5, 10, and then start my options on it. Who is there to add KRE at this time? That's it. But one thing, when this whole, the crash around the regional banking was happening, I did come and talk about taking a positions in the bigger banks. So I have been adding XLF to my portfolio, and so far that's been good. And I think I still have XLF position on my portfolio. I have a short put on XLF. KRE, not right now. Right. And I mean, my financial position is well served by XLF. I bought NYCB. I think that's a New York City bank, that, or whatever, Citibank or some New York community bank, which acquired Signature. Yeah, you have to be really careful. I know of some people. I was talking to someone 2 days ago. It just came up in conversation around stocks, and that gentleman said he lost. He picked up FRC after the Silicon Valley Bank collapsed, and there was a little tension around First Republic Bank also. Then the regulators stepped in. They saved Silicon Valley Bank, and they took positions on FRC. I'm sure the last week wasn't a good week for him, right? With seeing FRC is now plunged 50% after their earnings, and since then has gone further down. It was close to 13 or 15 bucks, to $3 in a week. Right. So these are very speculative ones. Yeah, you can put your gamble money in it, not a problem. But let's understand your position size is okay. Right. Is there still on FRC, could it still be revived? Who knows? There are too many players in the cook. Yeah, there have been $100 billion of outflow. And even I think they also got $30 billion. They got $30 billion inflow from their competitor banks. And I think they're still underwater. So this is more like a zombie bank. I don't know how long will it just chug along. Trying to FDIC hasn't stepped in. There are some speculations that maybe by Friday FDIC will take it over. It will go under FDIC receivership, and then they'll try to sell the assets and all that. There are still questions around whether the uninsured depositors will be made whole on this one or not. Anyway, it's if this bank goes under, it's the rich people who will get impacted. First Republic Bank's majority of the customers are, the wealthy folks from the valley, and who will get, and who probably would have taken those jumbo loans to build the mansions and all that. Now those jumbo loans are not. They're sitting on the FRC's balance sheet, which is now hurting it, because those don't conform to your guidelines, those which these government agencies, Freddie and Fannie Mae, they need if they have to buy those mortgages. So while these are called conforming loans, or I'm not a mortgage, but I think there's a term called conforming loans and non-conforming loans. So these jumbo loans, which you need, in which you pay maybe interest only loans or something like that, those are non-conforming loans, means you cannot sell them to these government agencies and get them off your books. So these big non-saleable mortgage loans, which are generally assets on the bank's balance sheet, are sitting on it, but those have gone way down in value. So yeah, FRC is going into its own trouble. Yeah, Mark says it's an excellent bank for rich people, right? And now those rich, and the worst is, those rich people will be bailed out because they all will have accounts more than 250K, and if Fed will bail them out, we should see more money printing. So moment there is a news in the market saying, hey, this may get bailed out, we'll see Bitcoins and the crypto going higher. Sam, my sister interned at FRC. That's nice. Cool. So yeah, too many things happening in the market. A lot of action is back, which sometimes is not good. Market should be boring. Investing. If we want more action, we should go and watch movies or go to Vegas. But we'll see. All right. What else? Yeah. Overall macro level, it was a mixed one. Right. We talked about it. Mega caps performed really great. Inflation numbers also came out this week, but mostly, as expected. So PCE, this is personal consumer expenditure up 0.1%, expected 0.1. Core PCE 0.3, expected 0.3. Year over year was 4.2, was not much of a change. So we didn't see too much chatter around inflation and all that stuff. It was all as expected. But if you're looking for recession, we ain't find it yet. GDP still grew. It grew slightly. It grew just by 1.1%, which was way less than what was expected. But I think the better part is, hey, GDP actually grew. So we didn't contract. There was no contraction in the GDP. So we'll have to wait for the next quarter to see if the recession sets in or not. Probably 2 more quarters, because that's our definition of a recession. 2 quarters of consecutive GDP contraction. However, I think in the Euro side, also they grew barely by 0.1%. So even EU also avoided their GDP shrinking, but barely. We'll see. Consumer spending is still healthy, right? Which is a little surprising, but that's why all these banking and I think the Visa and the MasterCard results also came out, and those results were also good. Looking at those results doesn't really tell us that consumer is actually worried about recession, and we are pulling back on recession. We are pulling back on spending. Doesn't seem to be the case at all, right? So consumer spending is still healthy, even though the GDP has slowed a little bit. And especially on these credit card companies, they have seen more from
Vivek.
Yeah.
Thursday, I was talking to a retired Fed economist. $30 per hour for an entry-level job.
$30? That seems to be too much, but I think
no, excuse me. Are you joking me? He says, yeah, they have to make a living. Yeah, well, if you're an entry-level job, you're living with people. You're living on a college budget. I mean, what the hell?
Yeah.
Oh, definitely. I'm looking for those jobs now. $30 an hour. That's ridiculous.
But I don't know which. If it is in a Bay Area, it's still not a livable wage.
Well, still, they have to live with people. They have to cut back. I mean, that's why the U.S. GDP is so high, because they keep on having these ridiculous giving out the money, so the cost of living goes up.
That I agree. I mean, we'll print more money. What's worse, right? Now, if the First Republic, the drama that's been going on with so many cooks in the kitchen, because, of course, the First Republic management is there. Now we have a federal home loan because First Republic, and again, I found so many things through this banking crisis, which like blows up my mind. Is there is another entity called Federal Home Loan, and all these banks can go and get a loan from FHL, Federal Home Loan, and those loans have nothing to do with homes. Hey, if I'm a bank, I'm having a crash crunch or liquidity crunch, I can go and borrow from FHL. So First Republic Bank has also borrowed a few billions of dollars from FHL. So they are in the mix. FDIC is in the mix because, hey, they are the primary regulators, right? And then the Fed is in the mix because maybe we'll have to print more, to if FDIC takes this into receivership, or if they want to, if government wants to buy the bonds which FRC has at their maturity value, where the money will come from, right? Again, something has to be done by Fed. So also Fed has opened up that BTFP, right? Bank term funding program. Again, First Republic could also dip into that. And then, like Naresh said, they were at to 30 billion. There are 5 big banks, all their competitors who came together trying to save this bank and injected $30 billion. And that was all uninsured money. And now they are also a part of this equation. So there are so many, cooks around here, and we don't know what's going to happen. Let's say, these big banks who invested $30 billion, could they put more cash in trying to say, guys, let's save it so that we can recover $30 billion? Right? One possibility could be that, but that could also be, hey, we are throwing good money after bad. Or they may think, let government come and try to rescue it, and also make us, save the uninsured depositors. And in that case, these big banks, $30 billion will also be saved. But from government perspective, this will again look like you're trying to bail out big banks. So politically may not be the best move, right? Is it a systemically important bank? If FDIC has to step in and save this bank, they have to declare it as a systemically important bank, right? And then would they be willing to do this? I don't know. And on FDIC balance, they have total, I think, $105 billion left with them. And for that $105 billion, they are insuring more than $10 trillion in the deposits in the bank. FDIC doesn't have that much amount of money yet, right? So they will need to get more money from Treasury. So Janet Yellen is in the mix. And then, of course, president is in the mix because it's an election time. You don't want to give a signal that you're trying to save the bank, which cater only to the rich people. And then you're trying to come and save, $30 billion of a big banks. So too much mess. I'm not touching this stock when it comes from investment perspective. We don't know what could happen. It may just die. It may just sputter along. Or maybe it's only the depositors, the individual depositors could be made whole and may not be the banks. Or I also heard other thing is banks are just waiting to see, FDIC take it over and then start to sell their assets of FRC at a fire sale, and then banks will swoop it. Too much things going around here. So we have no idea what will happen. But yeah, in any case, I think if you don't do anything, it's bad. If you do anything, also, that's also bad. So there is no good option left for FRC. If you try to come and save, that means a little more money printing. Fed will have to increase their balance sheet because somehow they'll have to fund these government agencies who are taking on these bad assets from FRC, right? So it means on one hand, Fed is trying to reduce the balance sheet, curb the inflation, and now again, you're gonna you may call whatever you may, right? It's going to be a quantitative easing. You can give another name. We already gave a name, BTFP. You can give another name for this whole funding program, but at the end of the day, it's more money being added into the market, more liquidity being created. So it's gonna be inflationary. So too much messy. I think at some point of time, I will have to stop following this. It's becoming too crazy out here. So anyway, but the stress in this banking sector, and we saw when it happened with SVB also, we saw the crypto was back up. I think last week it was down like 10%, Bitcoin was down. Now it's back up almost 8%. So whenever these, we'll see the stress of the bank, or now if FDIC take it over, more money printing, crypto is going higher. Oh, Ross says FDIC prepares to place first of all under receivership. Is it today's news? Hold on, let me just check. 3 hours ago. There we go. Hot off the press. So it didn't happen on Friday. but now it is happening. All right, so if that's the case, all the shareholders have been wiped out. So I'm sorry, whoever has probably invested in FRC won't see their money coming back. So the stock will go down to zero. Let's see, have they specified any their conditions? They're preparing to place under receivership. No time, more time to pursue rescue through private sector. JP Morgan, Chase, PNC. Now they're fine. Okay, I think this is what I was just talking about, that once it goes under receivership, you can get it much cheaper. If Sun falls into super, it will be third US bank to collapse since March, right? And every time you hear Treasury Secretary, our banking sector is great. There is no issues in our banking sector. And now this is the third one that is collapsing. What else? What's the terms and conditions? All right, FDIC, Treasury, Federal Reserve coordinated some meetings. Finally, looks like today they made a decision. Large banks are orchestrated by giving $30 billion. They declined to comment. Yeah, they'll be laying off 25%. All right, so I don't see anything specific mentioned here, but I think then it might follow the same course. FDS will take it over, try to sell assets through the salvage value. Of course, the shareholders will get wiped out, just like what happened with Silicon Valley Bank. This is the reason why it is so tricky, or I would say risky, why I call these trying to take, try to gamble on what might happen. It's at the end of the day, it's a gambling, right? So make sure to buy that. If you're buying these gambling chips, you don't put your food money to buy these, or don't put your utility money. Yeah. Shadow QE in effect, absolutely. So with this news, maybe we should see a little more, I don't know, and it'll get reflected, but that should boost well for crypto. We'll see how does that perform. Anyway, it doesn't matter. It's not a, this is not a, for a day or two. It's a much longer game. Too much mess. Yep. Buffett got all out except Bank of America. I think from a bank sector, yes, but Buffett still holds large position in Amex. More banks will fail as interest rate will kill. Now, this is interesting. Now, FRC going under receivership, and everyone knows what the reason is, right? Even some of financial gurus, talking heads, also now starting to blame Fed for the failures of these banks. I don't think Fed should be blamed. It's those stupid CEOs or the CFOs of the bank who should be blamed. But now this one more bank failing, does this give enough reasons to Fed to say, guys, no more rate hikes? I think this whole rate hikes is causing too much stress, and we don't want to do rate hikes. I don't know. I mean, even if a market thinks that this could be a trigger for Fed to either start maybe pivoting and reducing the interest rate sooner than it was expected, that will give a boost to the stock market. So everything is up in air. So there are so many forces of opposing directions in the market. We never know what could happen. No bank can survive a run on the bank. 100% agree. It is because no bank, anyway, you have assets to match their liabilities. That's what the fractional reserve banking is. Banking is all about confidence, right? Today, whichever bank, let's say Bank of America is there, because I have a confidence that it will survive. 30% of our depositors, if they try to withdraw their money from Bank of America will be in the same position, right? So none of the banks could survive a bank run. Unfortunately, that's how our financial system has been built. is that for every $100 that you have, you lend out, $500. It's all fractional reserve banking. You, with an assumption that you will never have more people coming, not everyone will be coming back and asking for their money. So it's okay. I can give lot more money and hey, one person is coming and I can return you the money. And two, maybe if 3%, 30% come all together, say, give me my money. Gosh, I don't have it. I gave it all of them and a lot more in the loans. I don't have money left. And then you will see, none of the banks can survive bank run. So it is what it is. But that's a sad truth. Ross, all Fed had to do was to increase bank reserve requirement to crush inflation, but that would hurt the elite and oligarchs. Yes. So Fed used to do this, right? In 1970s, a long back we talked about it because I went back to understand the history of how Fed has been regulating inflation. In 1970s, 80s, etc., Fed used to increase the reserve requirements to control inflation. But now they don't do that anymore. Marx, formula short a big bank, use social media, cause a run on the bank. No more rate hike will not solve the problem of bonds were sold at a cheaper rate. Yeah, no more rate hike won't solve the current the bank problem. But what's also happening is banks are also pulled back on lending, right? So many of these smaller banks are regional banks. Not only they are having a crisis of the underwater bonds on their balance sheet, but also they've stopped lending or reduced, not stopped lending, but they have reduced lending to small businesses, right? And now if the businesses can't get the loans to fund their operations, that hurts the economy. So from that perspective, yeah, those bonds that these banks are holding, which they bought it at when the interest rates are 0.25%, 50 basis points, those are well underwater. Right? And now I think the other thing that our accounting board should look at is, guys, just don't say that I'm going to hold it to maturity and value those bonds at maturity. We have any lesson that what is PCAOB, whatever the public accounting board should learn is hold to maturity is a concept, is a phony concept. When there is a stress in the market, you freaking just can't hold your bonds to maturity. Right? And that's what killed Signature Bank, killed Silicon Valley Bank, and I think even the Silvergate also had some of that portion. So we maybe if these bonds were not designated as HTM, but AFS, which is, guys, I will be ready to sell it whenever I want to. We would have seen the stress in these banks. Regulators would have seen the stress in these banks. Even people, just a normal CPA who know, basic balance sheet rating would have seen the stress in the bank long before it occurred. But of course, then the CEOs or the CFOs wouldn't have earned those $1 million, multi-million-dollar bonus. Well, it's very clear that, man, you guys are upside down. But this whole accounting trick allowed them to mark these longer duration held to maturity bonds at the maturity value, not at the current value, and that they could continuously, pump up their balance sheet and show that we are pretty healthy. We are pretty healthy. Until there was a need to sell those HTM bonds, and then sky fell down. With regional bank failures, watch out for the incoming commercial megathon. So I was also of the same opinion, except Ross, a small seed of doubt has been planted. I think there is this company, CBRE, didn't they just report earnings? And again, I'm not a big real estate side, but I think the CBRE group's earnings were great. And they also mentioned that even though there's a lot of concerns around this commercial real estate, but they don't see the situation to be as bad. Again, I've not gone into the details, but something that if you are interested, you may want to look at or listen to their earnings call, right? But again, my perspective is the same, is many of these regional banks are sitting on these commercial real estate loans, which now San Francisco has got 30% vacancy in commercial offices, right? Now, I would rather, and if I can't make money as a developer, as a builder, I would like, gosh, I don't want to, continue building all this because there's already overcapacity, glut. I don't want to pay off my mortgage. Bank, you take over my property. What's the bank gonna do with the property? So yeah, that's the next one which is gonna hit. But if you're more interested, I think in this earnings, CBRE told that they don't see the same issue. So may just want to look at that. But yeah, the next one will be the commercial real estate. What if US defaults on its debt in June? Bitcoin will go through the roof. Again, not a financial advice, but it's not going to happen. I mean, the world will be in a mess. So we will come back. At the end of the day, we'll probably raise the debt ceiling and print more money, but won't default on our debt. Right? That will be financial Armageddon across the world. Never believed in investing in bonds. Stocks beat all in long term. That is true, but if you are looking to get in, bonds do hold a value in a portfolio. It all depends on when do you want returns. Do you want regular returns? Do you want to have a consistent stream of income? Bonds does find a place in the portfolio, right? Stocks overall in a long term beat the return that you can get, but you could have a 3 years where the stocks have gone down. But if I'm a retiree and I need to have a consistent income, then the bonds will continue to pay me the interest. Good quality bonds will continue to pay me the interest. I don't really care what the current value is, because hey, I'm not willing to sell. I will be holding it to maturity. So if you build your bond portfolio like that, yeah, it does have a place. So by the way, my T-bills, remember when we talked about T-bills, that was way back in September, October, and I started building my T-bills ladder. Now those ladders are starting to mature, and I think it's the right time, because now I've been moving that money into the stock market as and when those ladders are maturing. It's a time to add more, and I guess every month I'll have one T-bill maturing for the rest of the year, and we'll be adding that to the market. Again, yep, you have to find out how you want to build your cash flow. But from that perspective, I think bonds does have a place. All right. Gosh, there's so much to talk, and we are on what page? Oops, where's my document? We just got started. All right. Overall, stock indices, NASDAQ total is up 17%. QQQ, which is 100 of NASDAQ, is up 22%. Overall NASDAQ index is 17%. These are and S&P is up 8.5%. These are the gains that we get in a year on an average. So this year may be different from average. By the way, it's not. There are still very well-respected analysts who are still of the opinion that we haven't yet seen the bottom in the market. So I'm not, going out and say, oh, let's get everything in the market. Still hold a sizable cash position. We don't know where the market will go, right? So I don't want to go in and out depending on whether it's Mike Wilson, who is I wouldn't say perma bear, but who is the most bearish on the market, very well respected Morgan Stanley analyst. 2022, he was the top rated analyst. So far hasn't been proven right, but his target is 3,200 for S&P. S&P closed at 400, almost 4170, right? There are others. I mean, I heard another one which is talking about just looking at the earnings, right? If you just do earnings multiple, still super high. So if you look at the earnings that the S&P 500 companies are supposed to report, looking at their forward earnings projections, it comes out to be the same, guys. Unless we are paying too much, market is really overvalued right now. It should be close to 3,400. But these Mike Wilson has been talking about going to 3,200 from January. Dave, yes, 3,200, yes. That's not his end of year target. That's his, like, guys, we haven't seen the bottom yet. And when will that bottom come? Who knows? Tom Lee is on the other extreme. Right? That depends on who listen to. Tom Lee has been perma bull. Even in 2022, Tom Lee was perma bull, but he was proven horribly wrong. 2022, Mike Wilson was great, and that's why he was #1 rated analyst. So you don't know. So at the end of the day, that's why I end up in, guys, I have to make my own analysis. You can't depend on any one of these financial analysts. Tom Lee is always perma bull. He's been on perma bull on Bitcoin as well, right? He was like projecting 100K. Ain't seen that yet. So, all right. The other thing that we generally see is sell in May and go away. It's a very, I think it's a famous saying in the street, in the Wall Street. But if you look at there's an interesting chart I came across, is if you look at this chart for last 40 years and see the stock market return from May to August, sell in May and go away hasn't really worked out. So even though it's a very well-known phrase in the market, numbers don't prove it. They buy a long call in 4,800 and sponsor that, sponsor it by, buy a long call and buy a long put in for 3,200. And then, so basically do your inverse strangle, long strangle, and then the stock market stays in between and you lose all that. That's all the other way of looking at it. All righty. What I was thinking, maybe go the other way around, is sell a long call at 4,800 because Tom Lee, guys, this is not a financial advice. Tom Lee is perma bull, right? He probably has the highest estimate of where the market will go. Probably market won't go beyond 4,800. So let's sell a call at 48. And Mike Wilson is the bearish of all the other estimate of all other analysts. So probably has the doomsday scenario, and markets may not get into doomsday scenario. So then let's sell a put at 3,200. Make sure position size is okay. You can do anything with options. I have no concern as long as your position size is fine. You can pick up the shittiest of the stocks from the market. You can get yourself in the worst option trade in the market. As long as your position size is fine, will live to survive the day. Just don't go wrong in the position size. Steve is willing to sell it today. All right, earnings still is a lot more earnings expected next week. What would I be watching? SoFi is another one, which is on my so-called watch list to add, because earlier SoFi had a very concentrated source of revenue, but over the last 2 years, they have really diversified their revenue stream through acquisitions, right? They acquired Galileo, they acquired, what's that other company? Now I can't get his name in my head, which does more of a tech platform for banking as a service. They acquired last week or week before that, they acquired a mortgage company. So the company that just started just as focusing on student loan had a horrible time, because when the student loans were being, the government came and put a pause on student loan and all that, didn't really work out. So they started diversifying it. Then I'm becoming interested. Maybe could this be a ticker for my portfolio? We'll see. But this gonna report on Monday before earnings. What else interests me? Ford. Let's see what Ford has to say. We saw Tesla stock hasn't done that great. They've been cutting their prices and the margins are under pressure. I'm assuming Ford will also have the similar stuff, but we'll see what Ford has to do. Starbucks, we'll watch on Starbucks to see what's happening in China. What else? No, of course, can't ignore. Oh gosh, Thursday gonna be busy. Apple, Shopify, Block, Coinbase. We'll see what it does. Lyft. No, Lyft is still surviving. That's I would say impressive. Carvana maybe back from dead. AMC, the big daddy of all meme stocks. Yeah. Tesla keep cutting prices. F is doomed on EV. I think F or GM, all EVs will be under pressure if Tesla keep cutting the prices so long. But we'll see how long can Tesla do it. All right, so that's all on my radar. We already talked about market this week, so I'll skip this. Sector-wise performance, of course, communication services up almost 6.2%, driven largely by, wrong column. Communication services up almost 4%, 3.75%, driven largely by gains in Meta. And then, of course, the big tech did well, so 2.43. When the techs or the growth stocks are doing well, we generally see little weakness in stable sectors, industrial, utilities, healthcare, didn't do that great. Yep. Worldwide asset ranking, Apple is still the most valued market cap company or asset in the world, just after gold. Microsoft jumped on number 2. Tesla, given the recent troubles, have fallen down to 12. Meta is continuing its march upwards. Berkshire numbers 8. So we'll see. All right. I don't have any open questions from previous sessions, so skip this. And what did I buy? Also, these buys and sell are stock positions, individual stock position that I picked up, right? I probably already have an option trade on Microsoft. I think I have an Iron Condor on it, but I did pick a few shares. Picked up TLT, XLI, Microsoft, Amazon. Sold nothing. So end of this month, end of April, this is what I hold in my portfolio, top 10 positions. No change in top 10 from previous month, right? So which is great. Within the top 10, yeah, some stocks went higher, some went lower, but overall the composition of top 10 is still the same. No change over there. S&P is now become the biggest position, almost 12%. Second biggest is the cash that I'm still holding. This does include T-bills. Cash. This cash is the cash available to invest, which means T-bills or any other cash that I hold in my bank account does not include my emergency fund. Then Apple, mainly Microsoft, Meta, QQQ, and all that. Sure.
When you have the time, can you explain what Activision blocking is going to do to Microsoft or Activision? I mean, what does Warren Buffett lose out on?
So I think
when you have the time, I don't want to interrupt.
No, but I can maybe spend a minute on this one. Is Warren Buffett. So first of all, Warren Buffett took a speculative position, which was very unlike Buffett. That was a position which you generally call as a merger or acquisition arbitrage. Microsoft wanted to buy Activision at $95. Stock was trading at 74. Market didn't believe that the deal will go through, and Buffett took a position at that, saying, if the deal does go through, there's almost 25% upside. But I think he also sold off that position, if I remember correctly. I'm not sure fully, but a major chunk. Was it this week or the last week? UK agency, whatever that, the competition agency, told that they're gonna block this deal. They're gonna sue Microsoft if they go ahead with the deal with Activision. So that, for Microsoft shareholders, that was a good news, because then you don't have to spend $69 billion in acquiring Activision Blizzard, the gaming company. So that bode well from a shareholder perspective. They rewarded Microsoft. Now, from Microsoft perspective, how is gonna impact them? I think the whole idea why they wanted to buy this was to expand their gaming platform. So this, if you look at this quarter, their gaming sector actually didn't grow. They lost in terms of instead of growing, the revenue actually shrunk. So I think that's why they wanted to get some titles that they can control on their Xbox and all that stuff. But we'll see. That's a growth area which Microsoft is looking at. They have a best hardware, but they don't have the best titles, right? They did buy another gaming studio, I think 2-3 years ago, but having an Activision would have given them a access to one of the best. I'm not a gamer, but I know EA and Activision are two big companies in the gaming which have the best game titles. So that was the case. All right. So if you have any questions on the portfolio, I can address or talk about it. Yeah, this is from a transparency perspective, guys. I do come and talk on many shares, but I want to be transparent in terms of what I hold in my portfolio, so you know where I'm coming from. Always look at, don't believe anyone who will, at least I don't believe, if I don't take anything on a face value from someone unless I know what they hold in their portfolio, because that drives a lot of decision making. So that should be even for you as well. What's the reason for investing in TLT? Right? The reason for investing in TLT is if the interest rates gonna go down, which market is expecting, that Fed will stop raising the rates after May, and then market is already pricing in 3 rate cuts this year. Whether it will happen or not, that's a different matter. But market is today pricing in 3 rate cuts. Next week, the situation could change after FOMC. So if the interest rates goes down, the value of the bonds will go up, right? It's the reverse way. So that's the reason why I picked up TLT is if interest rates will go down, the value of the bonds will go up. Are you still buying TLT? I've been building position in TLT slowly and steadily, right? So again, as you guys recall, I think last year, to mentally make sure I don't chase after the things that are just going high, or don't dump or become despair, fall into a despair situation when the stocks are in red. I'm trying to buy a company or a stock when it is red. So TLT, the day when I bought TLT was when it was red, and I wanted to invest some cash. And again, I'll generally buy a regular, right? Every week I'll put some money in the market, and I was like, okay, which one do I want to buy? I saw which ones are the reds in my portfolio, and I saw TLT was red, and I looked at my TLT position. I'm like, okay, not too big. That's why I picked up a few. So when I say few, it's not that I'm gonna go and buy 100 shares or put whatever I want to buy in TLT in one go. So very small positions. I think I've shared earlier, whichever week I bought, I've shared earlier with you guys on, hey, I bought TLT. But that's the reason why I bought TLT. Number 2 is also it's good from a trading on options perspective. I have been trading options on TLTs for 3-4 years, even more. And it's a good instrument. There's a liquidity is large, bid-ask spread is not that wide. So from that perspective, I have it in my portfolio. Its TLT is 20-year plus, 20-year and higher. Dave, so your hedge in the market is GLD, TLT, not any one of the inverse ETFs? No, I don't do inverse ETFs, Dave. The GLD is just, again, hey, precious metal. Whether it's going to be hedge, one thing which we all have learned is when the proverbial shit hits the fan, there is no hedge in the market. All assets will go down, including gold will go down, which is generally considered as hedge against a market risk, will go down. Only thing that survive at that point of a time is cash. But that's those short-term Armageddon kind of risks, right? But yeah, I'll have GLD. Today, my maximum hedging is through short calls in my portfolio. Right? I have short calls in QQQ. I have short put spread in NDX, SPX. I have a short call in SPY. So those are my hedging trades, right? Those worked beautifully in 2022. Haven't worked so far, but that's okay. The rest of the portfolio is gone. But those I consider as true hedging, right? GLD is not really true because we'll see market goes down, GLD also goes down. I hope that answered the question. How much do you think trainees for the federal government should earn? I have no idea. I'm not a labor market expert. So, but all thing is they should earn the decent wage to make a decent living, right? Giving $15 an hour in a Bay Area is not a survivable wage. How many percent cash are you holding? That's what, 10.24% as of yesterday. Yeah, this numbers I picked up as of yesterday. Oh, okay. Cash goes on value, high inflation time. That's an interesting long term. Yes, I think we did talk about it. Is high inflation time, if anything, that have served well to investors, and it is counterintuitive though. But the fact is, in high inflation time, the thing that served well the most was cash. In 2022, inflation was going higher. Bonds didn't work, gold didn't work, stocks didn't work. Only thing that worked in 2022 was cash. If you just held your cash, that would have performed way better than what if you had invested it in the market. Right? So short-term inflation, cash is the hedge. And I didn't used to think like that, but 2022 got me thinking the best performing asset in 2022 was cash under the pillow. But 2022 was also high inflation period because the dynamics have changed. High inflation and generally and over a long term, in a high inflation time, stocks will beat out because that high inflation means companies will raise their prices. They will be able to get, they won't be, they're not gonna let up on their corporate profits, and they'll grow higher than inflation. Completely agree. Gold, maybe medium term. So depending on what you're talking of when you say hedge against inflation, what timeline are we looking for? Very short term, at least so far I've seen cash works better. Anyway, Bobby, I have another question. Why do you think the Fed will do rate cuts anytime soon until the inflation is controlled? I'm not thinking. The market is pricing in. And it really doesn't matter what I think. Market is pricing in because if you look at the future Fed funds, they all are down from what the Fed funds right now are, right? So market is already pricing in, and they're thinking, Mr. Powell, we don't believe you. What you say is BS. The situation will be so bad that you will be forced to cut the interest rates. So that is what market is pricing in. And market priced in, I think month ago, it was 2 rate cuts. Now the market is pricing in 3 rate cuts. It may not happen. Fed may not blink. That's a different matter. All I'm saying is what the market has priced in. And I have absolutely no idea what Fed is going to do anyway. I hope that's answered the question. So you invest in ASML instead of TSM? No, TSM is also part of my portfolio, but not top 10 yet. So this what you see is the top 10. I also hold Intel in my portfolio, very small position. If it looks to semiconductor, which is the 4th one, I hold NVIDIA. NVIDIA is also not top 10, but I think it's top 20. Maybe TSM is also, I guess, it's top 20. Without ASML, TSM is nothing. That is true. I mean, TSM needs, not TSML. TSM needs that machines from ASML, right? So anyone who's trying to build the chips, especially these high-end, small 3 nanometer, 5 nanometer chips, need ASML. There's no other option. So that's why ASML is much bigger portion than TSM, but I do hold TSM as well. All right. But mind you, semiconductor is also cyclical. So you have to, if you are building your position, have to really have a long-term outlook to ride through those cycles of semiconductors. Cool. The next I maybe want to look at the Palantir AI. Which stocks you added this month? And you'll have to go back and check on, let's say, the 4 recordings to see, because I do come and talk about which stocks I added. Now I don't recall which ones were those, right? But I did come and talk about all of them earlier. I had added what? Meta, EEM, some of the, I know when I initiated my first position in XLV, and that is, I think, a new ticker I added this year in my portfolio. I think even XLI I added now. I bought Palantir. I'm not sure this month or not, but yeah, this year I also bought Palantir. So you'll have to go back and look at the previous one. I don't recall all, but whichever week I added, I have come and shared here. Again, but don't follow me, because you don't know what's the reason why I'm adding, what's my current position sizing is, and maybe I already have a hedge against it. So ask questions. That'll be more important than why I added rather than which ones you added. Great, which one you added, I can share, but more important, why I added. And then you have to determine if you fall in the same situation, and then take a decision. Guys, don't just go and buy based on what I buy. Please. That will be the worst outcome of these sessions. Do these sessions so that you learn and make a decision for yourself, and don't follow any other person, not just me, but anyone else. Everyone have a different motive and a different situation. Why would they would have bought something? And it's very, very important to understand that motive. Okay. All right. I do want to play a video. Let me see how long is this. I have not seen that, but it talks about the Palantir. We've been talking about Palantir for some time. I think started in January and all that. And now they introduced one more platform. So I thought I'll share with you. And after that, we'll jump into earnings. If there are questions, maybe we can talk about questions. All right. Until then, let's do 5 minutes. Not too bad. Not too long.
AIP empowers organizations to use large language models and other cutting-edge AI safely and securely.
First of all, is the audio fine? All able to hear it? Okay, nicely. Okay. All right. Let's see what they have to say.
The platform allows you to do three things. First, AIP lets you deploy large language models and any other AI within your private network anchored in your private data.
So this is very important. And 5 months ago, most of us, right, including me, I won't say all of us, because some of you probably are in the industry of artificial intelligence, but I did not have, much knowledge or interaction or information around LLMs, right, large language models. Ever since OpenAI came with ChatGPT, everyone is talking about LLMs, right? So that's what now they are talking about their LLM, but more importantly, which this is way more important, that it's been trained on the private network anchored in your private data, right? Remember what Samsung had an issue is, a lot of Wall Street firms have banned their employees from using ChatGPT because the data actually goes out to ChatGPT, which is to OpenAI, which is available to public, right? So what Palantir is doing is doing the same LLMs, but within a private network.
Data. It helps you create a full fidelity, real-time representation of all of the concepts, actions, and decisions within your business. Every truck, every warehouse, every shipment, every delay that can then be used by AI. Second, it enables you to define the ground rules around which data LLMs and AI can and cannot see and what they can and cannot do on behalf of humans. You can do this based on data sensitivity, laws and regulations, and competencies of the model. AIP provides the framework for AI to hand off tasks to other trusted task-specific models, as well as to trusted humans. Finally, with this great power comes great responsibility. AIP brings industry-leading guardrails to control, govern, and trust the AI-powered business of tomorrow. AIP automatically captures a full digital footprint of all AI inputs, outputs, and actions, including which AI was used for which decision, which humans were in the loop, and how they align with specific business purposes.
And I think this is one of a pride or concern on all these AI models is because we don't know how the decision was arrived at. So I think they're trying to address this. The other thing which Palantir is trying to address, and they have been good at it for years, is having control and making sure only those who are authorized to access the data have access to data. That could mean a human or a training model, right? And Palantir has been building their whole solution for 2 decades on that security, and and that's why their majority of their customers are from a government agencies, right? So they're built in those things. Okay. All right, let's continue.
Let's take a look at it in action.
That's more important.
In
Action.
this demo, let's say you're a leader at a US-based manufacturing company with customers all over the country. You've just received an alert that a hurricane is forecasted to hit one of your major distribution centers in the South, and you'll need to shut it down. You want to know whether you should accelerate, delay, or cancel orders to your customers and other remediations you can take. Here in AIP Terminal, you can ask questions and collaborate with a large language model or LLM. To what extent will Hurricane Cynthia affect our distribution centers in Louisiana? As well as follow-ups. How does this impact customer orders and associated revenue? Under the hood, as you ask questions, the LLM is able to traverse a data foundation powered by real-time data feeds from all across your business. Importantly, you can control which parts of the business the LLM has access to. For example, we can see here that although the data foundation contains employee-level PII data, the LLM can't see or access that data. This has been informative. You want to understand your options and take action. You can act.
So is it this? So this data has always been there, but then it needed someone who understand how to use these tools, etc., or whatever tools that Palantir would have built on top of the data that they have, the data analysis tool, query tool, introduction of these LLMs, and has extracted all that complexity out of a decision arriving, right? You could ask questions and get answers. Even without this, someone would have, a good developer would have reached or would have created a similar report on saying, hey, if you have got a hurricane coming up, this is how the impact would be. But that would have needed another developer, 2 hours of development, maybe a days to build that out. And then, the decision making is not that fast. But what these LLMs and this whole AI is starting to help these businesses is ask a question, and all that grunt work will be done in the back end, which is transparent to you as a user and will give you the answers.
Ask AIP to simulate a baseline scenario. What would happen if we shut down the affected distribution center? It uses a transportation network optimizer model and shows you the impact on backlogs, revenue, and commitments, and highlights the impact on your highest priority customers. You can also see which specific orders can be seamlessly fulfilled by other distribution centers. This is a good start, but you want to do more. You want to know if you should charter additional trucks to increase the volume of deliveries before and after the closure. What are some options for chartering additional transportation for order fulfillment and the impact? AIP offers 3 simulated courses of action alongside estimated cost. Option B, a 20% truck capacity increase, seems to have the best cost-benefit trade-off, and your highest priority orders will all be taken care of. After validating it further, you propose your plan for cross-functional sign-off from manufacturing, supply chain, and customer service stakeholders. Let's look under the hood again. Many of these steps require a deep understanding of how your business works. LLMs alone don't have the right context, and we definitely don't want the LLM to give answers not grounded in reality.
So this is important, that the context of business and the data related to the business and your LLMs have to run on that data, right? Just the tech is not important. The data is way more important than just the tech. Now, Palantir has built all these models, which they have been using it now, for many years. But what these LLMs have tried to help is to tie all of these models together and think through and use them as a human would use. Right? So instead of now you waiting for 5 people to work on this particular problem to give an answer, one person cannot do it, because now they got access to this powerful tool, right? So now in Silicon Valley parlance, every developer can now be a 10x developer, right? And another 2-3 years, if we don't learn how to use these tools, it's going to be tough when it comes to the job, right? It's the same thing. If you didn't know how to use Microsoft Office, if you didn't know, or even prior to that, if you did not know how to use calculators, very soon you'll be replaced by someone who knows how to use calculators. Similarly, computers became ubiquitous. If you don't know how to use Microsoft Office, tough luck. Same gonna be here.
AIP connects LLMs with trusted models across your business, including forecasting, optimization, machine learning, and standard procedures. AIP then facilitates a secure handoff between these models as needed, which keeps each model in its own lane.
Oh, yeah, that's what it's talking
This
about.
lets you then use the LLM plus all of your other models in concert safely to enable reasoning through the different scenarios and courses of action. All stakeholders have approved your plan, and you now want your operational team to get cracking. Much of the chartering and rerouting has already happened through automation as you authorized. The operational team can monitor from their dedicated workspace and adjust as any surprises come up. They'll also need to stay in the loop for certain steps by policy, such as verifying customer consent for early deliveries. As they make decisions and updates, routing and optimization models rerun autonomously on their behalf within the limits around key KPIs. As decisions are made, they are continually pushed to your operational systems, triggering real-world action. They're also logged for future review. Let's go under the hood one last time and look at what enables your organization to safely govern LLMs and other AI to assist you through scenarios such as this one. Here in the AIP control panel, you can set the guardrails and limits per model, including which data objects they can see, which actions they can recommend or take on behalf of humans, which tasks and workflows they are trusted to drive, who can use them, how cost is attributed, and so on. You and your organization have formed an optimal, multi-pronged plan of attack.
All right, so that's all about Palantir's AI. Again, we do hear a lot of companies talking about AI, but is this going to be the one which is going to benefit? Who knows? But at least I am a little more positive on Palantir and the progress that this company has been doing over past 2 years and how they have diversified their revenue stream. So AI was the recent one thought I'll share in this meeting. Sam says, question, a few days ago, NBC News dude had AI personality. However, his answer is superb and concise, while mine on Chat GPT not. So I don't know in terms of which NVC, etc. But Chat GPT doesn't always give the right answer. And now I'm thinking that I may, because I did enroll into a paid version of Chat GPT. So yesterday, while I was looking at the ASMLs, and I was trying to get information on major of the stocks that I hold, or the stock that I want to analyze it, look back for the last 20 years, look at revenue growth, and the few parameters I wanted to find out. So I went to the Chat GPT and asked for the information, put in a table of last 20 years, the revenue numbers, revenue growth, return on equity, and a few other things. And it gave me the numbers till 2020, because it said that, hey, I have only till 2021 March. So give me till 2020. Then I went and did a fact check with this website, and then I realized the numbers were some off. I'm like, gosh, if I can't depend, so these are the facts, right? This is not I'm asking any hypothetical question which needs any intelligence. This is just a fact, is give me the list of the revenue numbers for last 20 years. And I saw that Chat GPT, it drew the table, gave me everything when the numbers were a little off, right? So then that put me off. I'm like, gosh, then why should I be paying for it if always I have to go back and do a fact check? I think it is great. I still find value in it in terms of, if someone is a copywriter or a content writer, probably great value. But when it comes to looking at hard numbers, I still feel I have to do a fact checking always. The business PLT are doing is not scalable. So I don't know which side of the business you referring to, Steve. Are you referring to the government side or on the commercial side? I agree, government side business probably not that scalable, because you don't have a earnings, or you don't have a bargaining power much with the government, and very soon, you'll run out of the governments who can afford your software. But there's a huge commercial market which is still available to be tapped. So if you want to talk through this, we can learn from each other. I might have my own blinders on PLTR. It's absolutely fine. I didn't want to buy it when it was a meme stock. I waited. I picked some position 2022, picked a lot more in 2023. So far, I'm liking what I'm seeing. So I'm not sure from your scalability perspective, which one are you referring to? Okay, I see a link to a YouTube. Just let me first check. What is it? Oops. School isn't going to be easy. Oh, that's a Brian Sullivan. Okay, that's an NBC. Oh, there was another one, CNBC, I think, related to AI. One of a CNBC anchor was in some studio. Forgot which studio was that, and where she was filming this whole, her that episode around talking about AI, and they were also showing a deep fake. My tiny position is Palantir down 63% when you bought it. Yeah, it all depends when you bought it. So I think mine is still down, even though I bought a bunch at $6. I think I initiated my first position when it was 22, 25, something like that. Then I bought another one when it was 15, bought another one when it was 6, few more when it was 7, 8, things like that. Bedrocks makes a separate coffee-based foundation model that is accessible only to customer trades. Yeah, so I think this is coming from Amazon Bedrock, I guess. Yeah, so eventually, I think all company, the way these whole AI models will work, it has to be that the company-specific data doesn't go out. So whether it is Palantir, whether it is any other company. As if all hyperscalers are providing training LLM. Oh, sorry, I missed that one. With private data, with what's distinguishing PLTR? A PLTR, if you look at from the work that they have done so far with the government agencies, it's I would say it's a level of how good you are in doing that work, right? PLTR was the only software company certified for the federal level security, the top level, I think not even L5, but one level above that. So that was the only first company, the only software company that was certified for. So from that perspective, number two is also what kind of a models you are able to build. Now, using their learnings from building these models help out, in your war zones, etc. So that's a lot of learning that PLTR has accumulated in building these prediction models and models to help where you should deploy your troops. You have this enemy have moved in so many tanks in this area. Now help me in making those decisions. They have been building these models for the government sectors for years. I think during COVID, they had a models on how to distribute the COVID-19. Now they're adding LLMs on top of it and trying to use it for the commercial ones. I think that may be a change. Eventually, it may not be just one player, right? It may not be one player wins it all. So, and at the end of the day, it doesn't work out, cannot work out. Who knows? But so far, over the last 2 years, looking at how they are changing their customer mix and the revenue mix, that makes me a little bullish on Palantir at the current price point, right? If you had asked me the same question when Palantir was traded at 50, 60, I think it did go to those levels, right? Not last month. Say, yeah, maybe 50, 45 was the highest one. Yeah. So looking at where it's trading now for 2023, I think for me, again, may not be for you, but for me, I think it was a decent risk return that I started building position at around $6. All right, let's jump on to earnings. Oh, there's another Wall Street Journal article. AI, she fooled my bank and my family. Oh yeah, this is going to be the biggest problem is because with using AI, now you can also, we already had a deep fake, right, which will change the face. Now we have a lot of these AI projects, which will, if you just give 15 seconds of your voice sample, they can map out overall, how your vocal cords will work and can give a big speech. Now, the bigger problem that we're going to see in society, if this is AI is left, the use of AI and these models is left untamed, is we'll never be able to know what we are seeing on the screen is true or not, right? It could be a deep fake and these fake audio being used and misinformation be spread. That's the biggest problem that we're going to have with the spread of these technologies. And the positive side, the brighter side is, hey, we could actually revive many of those old famous personalities who don't exist in the world anymore. We could have Martin Luther King come and give us a speech. We could have Gregory Peck. We can build a new movie in 2022 with Gregory Peck, right? Things like that. So there's a lot more power will be available with those who know how to use these tools. The biggest question is, if that power also falls into bad hands, bad actors, they could, this whole face recognition and this lot of websites have your audio recognition. Now all that can be fooled. That's the biggest problem. All right, let's talk of Google. Google is not, Google is called Alphabet. I don't know when I will pick up. Google is Alphabet and Facebook is Meta. So anyway, let's talk about the earnings and we'll finish our session after that. Overall, okay, let me just reduce it a bit so that we can see everything together. Their P&L statement. Revenue is up almost $70 billion for a quarter. It's billion for a B. It's big company, $70 billion for a quarter. Overall, total income from operations has gone a little down. So this is, I think somewhere we were talking about, is it operating margins that is driving these big companies? Not really. Google operating income was actually less than what they had in a previous year. Overall revenue is up 3%. Cost of revenue, which is research and development, R&D cost was up 26% from 9 billion to almost 11.5 billion. Sales and marketing was up significantly, almost 10-12%. Right? Operating margin is actually down in this quarter, but free cash flow is up 17 billion, up to $17 billion. And number of shares has come down. Outstanding shares has gone down by 4%, which I like as a shareholder. And $70 billion of share buyback, which is close to 5% of their overall market cap. So far, so good. I don't have any questions on it. So let's dig deeper of where did they make that $69 billion, almost $70 billion. Google search continues to be the biggest, will be the biggest revenue generator for years to come, 40 billion. YouTube ads is 6.6 billion, which actually has decreased. So now YouTube was the one new business that have been contributing to Google's revenue over past many quarters, has been increasing, but over the last 2 quarters, we are seeing it decrease in the revenue. So it's like a stabilizing it, but still $6.7 billion, which if you annualize it, what does that mean? 6.7 multiplied by 4. Oh, where's my calculator? Oops, let's bring that up. 0.7, almost $27 billion is a annualized rate. And I don't know how much Netflix made or Disney made, but this is a big streaming giant. Let's see how much Netflix. Oh, it should be there on Finviz in terms of a last year, how much Netflix made. $2022 revenue was $31 billion for Netflix. Okay, not as much as, but pretty close. They are now just YouTube is almost as big as, slightly less than Netflix. Google network is slightly down. So what happened? Search was up 2%. YouTube ads were down 3%. Their other revenue was up 9%, which is this Google others, from 6.8 to 7.4 because of YouTube subscriptions. This is the reason why when you're going through YouTube, they'll ask you subscribe so that you don't see those ads. Now you can't even skip some of those ads, right? They're forcing you to move to the subscription mode, and that's what contributed 9% growth. Google Cloud is still the shining star, from 5.8 to 7.4 billion, of course, from a small base. So that's why the growth is 26%. From a operating margins perspective, even though overall Google had lost on operating margins because they had to take some, I think they had to take some charge on these layoffs and all that. That's the reason. But the good part of these results were, for the first time in the history, however short the history of Google Cloud is, Google Cloud actually made operating profits in this quarter. So that was the first time when actually Google Cloud made some operating money. I think it's maybe $100 million, something like that. It's not over here. Yeah, okay. But that was a positive sign from Google's perspective, that now they've turned around the corner. Now they can invest in Google Cloud, but invest profitably, right? So, oh yeah, it's $191 million is the operating income from Google Cloud. So that's a big change from losing almost $700 million in last year operating income. Now they're actually made $191 million of operating income, right? Now, overall, this unallocated costs have gone almost 10 times to 3.2 billion, but out of that, 2.6 billion is related to reduction in workforce and office space and all that. So that's a down 2.6 billion. They got a little positive from this almost $1 billion of up, because they changed the server life, and now the assets will depreciate at a lower pace than they were able to do it earlier. So overall, I guess maybe $1.6 billion of the net hit. $70 billion buyback authorized, which is great as a shareholder. So far, I don't see anything wrong in Google. There was a report earlier this month that Samsung may dump Google search for Bing. And I think that on that day, Google stock fell down by more than 5%, I guess. But actually, that didn't happen. Samsung decided not to proceed with this. So overall, I'm still good with Google. I hold in my portfolio, as you've already seen. When I share the portfolio, I continue to hold it. These are some of these companies which are part of core portfolio, still have enough amount of a cash. Oh, where is it? Oh, where's the balance sheet? Gosh, I don't have it. Hold on. Let's look at Google's balance sheet as well, and see what do they hold on their balance sheet. One second, let me just pull that out. Google Alphabet. 23 Q1 already. So let's bring this. Where's the balance sheet? Oh, that's the cost of revenue. Operating incomes, segment results. We already saw this. But they didn't share the balance sheet in their press release. Okay, I have to go to 10K. Look, they should, yeah, there it will be, right? Oh, there we go. So overall, from balance sheet perspective, cash and cash equivalents, $115 billion. So they're still sitting on a lot of cash. So which gives them a lot more optionality. Buy back the shares, great. You could acquire a company, you could invest in the business. And if you look at their any long-term debt, 13 billion. So as compared to their overall assets, very strong, very less number of, in very low amount of debt. So very, very strong balance sheet, to survive any of these downturns. And that is why over this whole this year, we're seeing a lot, even when the tech companies are recovering, the bigger companies are recovering at faster pace because, hey, they have such a huge balance sheets they have so much amount of cash, their business models are solid that they can ride out this weather way better than the smaller ones. So that's Google. Any questions on Google? I will spend 5 minutes on each one of them. All right, let's move into Amazon. So before I jump into Amazon, this one caught my eye. This was when the CFO of Amazon came and said, AWS seeing optimization continue into second quarter. And we'll talk about this. And then the Amazon stock suddenly from being 10, 12% up, boom, it just went down. So I thought that was like pretty funny tweet, reflecting the shareholder response after this one sentence was blurted out by Amazon CFO. So let's talk about Amazon. Overall, net sales have increased 9% to $127 billion. If I recall correctly, I think last quarter it was 7%. 9% at such a big base is still okay. North America segment grew 11%. International segment is only 1%. AWS is up 16%. So this is where most of the investors pay a lot of attention to, is how your AWS is growing. Right? Remember, Google grew 26%. AWS is growing at 16%, but Google base they grew from 5.8 billion to whatever. Now they are going at a base of $19-20 billion space. So 4 times bigger than what Google's cloud is. So that's overall a scenario on the net sales. If we ignore the Forex issues, the overall from an operations perspective, their net sales would have been up 11%. Now let's talk about operating income. North America segment operating income is $0.9 billion as compared to the loss in prior quarter. So overall operating income is like $4.8 billion, which is much higher than what it was in Q1, up 30%, which is great. North America operating income, now they have turned the corner. They've been doing losses for last 4 quarters and now have finally flipped from being an operating loss to operating income, right? Layoffs, that's what have happened. Layoffs, and or not renewing your leases and all that. So, but I guess majority has this operating income has been generated through the round of layoffs that this company has done. International, still challenging. Something if this, they turn around a corner on this one, That'll be great for the company. But international overall, the revenue is $29 billion, which is maybe 25% of their overall total revenue. Right? AWS, this is where a lot of valuation of Amazon comes from, up 16% year over year. But operating income wise, OPEX wise, it was down 21%. So they did grow the revenue, but a lot more investment has also gone into building the capabilities for on their AWS. I don't see the detail of what they spent on. Maybe trying to build these AI capabilities, LLM capabilities, AI as a service. Right? Who knows? But we did see, even though the sales grew, the operating income actually was down. Net income was $3.2 billion. So remember, at the top, you have your revenue, sales, right? Then you get your gross profit. You subtract your cost of sales from it, you get a gross profit. Then you subtract the cost of operations, you get an operating profit. Then you subtract a lot of other stuff, which is taxes, other expenses, blah, 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 blah. You get your net income. So net income, they made $3.2 billion in the first quarter, which was compared with a net loss of $3.8 billion compared earlier. So if you're only looking at the net income, oh, well, that's a great quarter. Amazon is doing so great if you don't get into the details, right? But this is a useless number for us to look at because of I'll probably, where's my P&L? Anyway, so we'll go through the P&L and I'll explain why that number is useless to look at. And that's the reason why I spent a lot more time in talking about operating income and not really a net income, right? So net income is $3.1 billion. But I want to focus more on operation side. So operating cash flow increased. Free cash flow was also, free cash flow became much better, is now at 3.3 billion outflow as compared to 18 billion outflow, right? Now, let's look at their P&L, and we'll talk about why this is not meaningful. So total sales were up 9.5%. Operating income was up 30%. But then we had this Rivian, which is coming under other income or other expenses. So the net income is now, so last year, same quarter, the net income was loss of $4 billion. Now the net income is profit of $3 billion. So it's like a swing of almost $7 billion. But the reason have to pay attention to this is the big change has come from the Rivian. So because Amazon holds a significant stake in Rivian, they always have to report the mark-to-market losses or gains on their investment portfolio. Right? And these accounting rules had changed a few years ago. So now the companies, like if you're looking at Berkshire Hathaway, you can't really look at their net profit, but that doesn't really tell us anything about how they're doing in their business. You have to look at their operating profit, because the net profit could be changed by, hey, what happened in the stock market today? Right? That really doesn't mean anything from how is Amazon executing its business or how is Berkshire executing its business, right? So the net income is meaningless over here. What I also found was Google have reduced their share count by 4%, but Amazon looks like they're still being a little generous in paying stock options. Their stock is up, the total number of shares are up 2%. Which I think at this point of a time, it is huge. If Amazon was a smaller company like Snap, I can understand why they're paying 2%, 5%, but it's now becoming a stable company. But I won't complain. 2% is still okay, not too bad. Other thing you want to look at, whenever you talk about Amazon, everyone knows Amazon is a e-commerce company. Everyone knows Amazon is a AWS company. What many people don't know, but if you've been joining these sessions, you know that over the past 2 years or a year and a half, 18 months, Amazon also started making big foray into advertising. And now it is good to see that advertising revenue actually grew 23% year over year. Right? So stores grew 3%, physical stores 7%, which includes Whole Foods, third party 20%, subscription 17%. Advertising continues to grow and now is at $9.5 billion. It's bigger than Netflix, isn't it? 9.5, yeah. So Netflix made $31 million, $31 billion revenue. Let's go back here. Yeah, $31.62 billion. And Amazon made $9.6 billion in the recent quarter. So 9.6, annualize it. It's bigger than what Netflix did last year, right? From an advertising perspective. AWS 16%, all others is up 57%. So far, so good. They also completed the acquisition of One Medical, right? This is their foray into healthcare. And they also plan to open a new AWS region in Malaysia and Australia. So that means more expenses. And maybe that is the reason why CFO came and told, hey, our operating margin in our next, sorry, not operating margin, that was a growth. Also, even the growth as well as their operating margin may be constrained for the next quarter. So cost control will continuously to be the focus. Cost cutting, layoffs, or Google took away staplers, man, of everything else. Take away my shoe, I don't need that. Take away my food court, but never take away my stapler that I need. But yeah, Google took away staplers too. CapEx will be lower than what they spent in 2022, which is good. Customers are looking to control cost, and growth rate in April is already down by 5% as compared to April of 2022. So that's what caused analysts to change the course, and then they dumped the stock. So far, everything was looking so good on Amazon. Revenue better than expected, earnings better than expected, your margins better than expected. And when CFO opened their mouth and said, oh, our growth rate in Q2 maybe slower or lower because we are seeing April is down 500 basis points, market stock tank, right? And then I think Andy Jassy had to come in between, interject and say, but remember, 90% of the global IT spend is still done on the on-premise stuff. So cloud has a long way to go. 1-2 quarters just won't matter. Anyway, so I use that opportunity to maybe pick a little bit share of Amazon. That's what I shared earlier. I'm like, yeah, I don't see anything bad in this. And when market present this stuff, maybe we should pick up some stock. So that's on Amazon. I don't see anything that is concerning to me. Next quarter may be challenged, right? But yeah, I'm not looking at just for the next quarter. Or anything on Amazon? Let me sip something and then we'll continue. 2 more companies. Sorry, we are 7 minutes over. I'll quickly rush through 2 more. Should be done by 12:20ish. If you want to drop off, please feel free. And I'll just finish in another 10 minutes. The couple of more earnings. All right, let's jump on to Microsoft. That shouldn't take much time. Everything is good, nothing much to worry about it. So let's quickly go through this. Microsoft overall revenue is $53 billion, up 17% year over year. If you ignore the currency fluctuations, because Microsoft doesn't control it, from a business execution perspective, up 10% year over year on revenue. Gross margin is almost the same, right? And operating income is up 10%. And overall net income is 18.3. In this case, we can actually pay attention to net income, right? Because EPS is 2.45. That's okay. Looking at the business side, so there were they categorize their results on three main segments. One is productivity and business processes, right? In which you get office commercial products like your, I think Office 365, etc. So that's the revenue, which was up 11% year over year, total $17.5 billion. What's more interesting over here to see is LinkedIn revenue increased 8% in this quarter. What else? Dynamic products is up 17%. That's okay. Cloud services revenue. This is 365 Office. So overall 11%. Intelligent cloud is there, Microsoft Cloud and all that. That's up. This 22.1 billion, up 16%. Azure, which is their competitor to Google Cloud or AWS, grew 27%. So Google 26%, Microsoft Azure 27%, AWS is 16%. Then more personal computing, which is where your laptops and the PCs comes in, and your gaming stuff will come in. So that was down overall 9%. And that largely driven by the Windows OEM, right? The decrease in the number of your laptops or the PCs shipping with a Windows operating system. So, but that's been a story for past few quarters, because you're comparing, I think since 2022, 2021, they saw 2020 and 2021, they saw huge uptick because everyone was at home. We need new laptops. Kids are at home. We need some computer for them. Your partner is at home. We need a computer for them as well. So everyone at a home were buying these computing devices. So not just Microsoft, but even HPs, etc. This Dell, etc. They also saw a huge growth in those personal computing devices. Now that growth is no longer happening at the same pace, right? So it is pretty expected that this will slow down. It has been now slowing down. The other thing was, I read somewhere, but it's not mentioned here, the Xbox content revenue increase only 3%. It could have been much better if it was not for the Xbox hardware revenue actually down almost 30%, because they had a lot of inventory and all that stuff. Anyway, I think overall still it's a decent quarter, and that's why we saw, again, it was better than feared. So market rewarded it immediately after the earnings were announced. And Satya Nadella, he didn't miss the chance to drop the word AI again. The world's most advanced AI models are coming together with the world's most universal user interface natural language to create a new era of computing. Across the Microsoft Cloud, we are building platform of choice to help customers get the most value out of their digital spend and innovate for this next generation of AI. So let's talk AI. And as you guys know, they have a big stake in OpenAI. And OpenAI is what is powering their AI offering. Right? All right, I'll skip this. Yeah, Microsoft Cloud revenue was up 22%. It's fine. What else? Other highlights. Returned $9.7 billion to shareholders. I am a happy shareholder, very happy with that. Thank you, Mr. Nadella. What's their dividend yield? Because Microsoft is also a dividend paying company, but I don't know what their yield is. So, oh, it's only 1%. So dividend yield is not that great, but I'll take share buybacks anytime. Operating expenses were up 7%, right? Year over year, driven by 2 points of growth from Nuance and Xander acquisitions. Oh, so they completed these acquisitions. Nuance should help them in their AI. Other income expense were, okay, 321 million, doesn't really matter. I think that's also free cash flow is almost $17 billion. Nothing to worry about. Their P&L statement, anything that stood out? Overall revenue is almost $53 billion. Operating income is $22 billion. Others is only 321. So that is why I said we can actually look at a net income and make decisions based on the net income itself. This is a usable number. In case of Amazon, it wasn't. Yeah, what caught eye was this one. They actually increased their shares. So they are diluting. So on one hand, they're buying back the shares, which is great. But on the other hand, they're also diluting the shares as compared to previous quarter. So that is how much percent dilution. We got 7,534, 7,464. So maybe a 1% dilution. Okay, so this is still okay, not too bad. But just a point to be noted, there was a dilution done. And sometimes when and I don't know if it's from Microsoft or not, maybe they did what, $9.2 billion of a buyback? Sorry, $10 billion of a buyback. So their market cap is what, $1 trillion? MSFT. It's 2 trillion. Right. So this is like less than 0.5%. So they bought back less than 0.5% and then gave back more shares. So overall, share count still increased. Right. So sometimes it's good when you hear this buyback stuff, you go and see eventually did they increase the share count, or you bought back here, but then you gave more as a part of your stock options plan. So overall, as a shareholder, I love buyback. I mean, you should do buyback anyway, but then sometimes these buybacks doesn't impact much because, hey, we gave off more share from other pocket. Looking at the balance sheet, overall cash and cash equivalents and short-term investments, $100 billion. This is why you like these big companies, Google, $120 billion. Microsoft, $100 billion on their balance sheet, right? And any long-term debts, $40 billion. Long-term income tax is 25. So which both of you will have to pay. You can't go without paying. So they do have Alphabet's balance sheet was more cleaner, more pristine, more solid. Not saying the Microsoft is not a solid one, but when you compare, that was better than what I see in Microsoft because they have a long-term pending income tax and also long-term debts. So that's on much on Alphabet. Like I said, pretty decent quarter, nothing much to talk about. Final one, and then we'll end after this, is Meta, formerly known as Facebook. So what did Mark Zuckerberg has to say? We had a good quarter and our community continues to grow. Our AI work, he won't leave a chance to drop AI because this time I didn't see Meta. He's not talking about Meta anymore. Our AI work is driving good results across our apps and businesses. We are also becoming more efficiency. So we can build better products faster and put ourselves in a stronger position to deliver our long-term vision, right? I think the long-term vision still has Meta in it, but what market is also rewarding is, guys, that you're focusing on other stuff also, and not burning hole just by investing in Meta. When it's Meta means metaverse, which they continue to. So revenue is overall revenue is up 3%. So again, not a great change in revenue, but the expectations were so low. The market was, wow, it was up what 15% right after earnings. And operating margin is 25%. Revenue overall $29 billion. This was the reason why market liked the stock was after the series of declining quarter by the quarterly revenues. Now we are seeing increase in quarterly revenues, right? The first time when the Meta had reported their first ever revenue decline year over year for that quarter, shares were like, they dumped the shares. Second quarter, similar stuff, the revenue decline. I think it happened 2 quarters, right? And I don't recall. I mean, we talked about it, but now at least we are seeing quarter from Q1 of 2022, which is right here, to Q1 of 2023, we actually see an increase, right? Q4 of 21, so this compared with this was a decrease. This compared with this was a decrease, so 2 quarters. I mean, compared Q3 2022, Q3 21, and Q2 to Q2. Oh, after 3 quarters of consecutively declining quarterly revenue, not 2, but 3 quarters, now they reported the increase in revenue. That like, oh, the ship has turned, right? Some sense has gone into Zuckerberg's head. Now Facebook, Meta will be back into its trajectory that they have maintained ever since they started reporting results, ever since they went public, 2012 or something, right? Last 10, 11 years. After 3 declining quarters, now we are back to increasing revenue. So let's look at a quick numbers. Daily active people is $3.02 billion. I mean, they got half of the world on their platform. I think anyone and everyone who could be on Facebook or could be on social media or any of the properties probably is. So I don't expect to see the user growth anymore, right? You ran out of people, man. There are 7 billion people, out of which half of them will be maybe toddlers and the kids who don't have access, who don't have accounts. 3 billion is probably good enough. Active is monthly active is 3.8 billion, right? So actually they have almost 4 billion people, but this was daily active, right? A total, how many users they have? So if monthly active is 3.81, it means they probably have more than 4 billion users, right? More than half of the world population is already on one of their properties. Now their main product, Facebook, which is the social media app, daily active users were $2.4 billion on an average, up 4%. Ad impression and price per ad. This is important, that the ad impression increased 26% year over year, but the average ad price decreased. It could be because of, I don't know, we have to check whether they were more on the international side where you can't combine the same price. Revenue is up 3%, cost is up only 10%, including the restructuring charges that they had to take for the layoffs. CapEx is 7.95%. They repurchased $9.22 billion. Okay, they also repurchased their shares. So we saw 3 companies repurchasing the shares. Cash and cash equivalents, $37 billion, big enough. Headcount is decreased 1%. So restructuring, there was a separate paragraph around restructuring. I'll just say in March 2023, we announced 3 rounds of planned layoffs. So I think they already did one last week or a week prior to that. When it's the last week means the week that just gone by, means 2 more coming in. And reduce the company approximately 10,000 more employees is what they're looking for. Yeah. So ignore this diluted EPS. I'll skip that. Average revenue, family average revenue per person. So ARPP is $7.5, which is pretty strong, right? It is little less than what it was last year, but $7 per person is pretty good. And it is because of this Facebook, which is their main app. So this one was across all of their properties, right? Family, they have Instagram, they have WhatsApp, they have Facebook, and then they have there's reality labs and all that stuff. Now, when it comes to the Facebook, their average revenue per user is $9.62 billion, which is great. Majority contributor is US and Canada. We pay almost $50 per user. And then the rest of the world, the Asia Pacific, etc., is 4 billion. Rest of the world, which I guess includes your Africa and all that, is 3.35. Europe is $15 billion. So if they can extract more from the other regions, which is a little difficult thing to do, we should see this ARP becoming higher and higher. But yeah, I mean, I didn't find anything bad, or I didn't find anything which was too great. Just the fact that now they have increased the revenue quarter over quarter, and the fact that Zuckerberg came and told efficiency is going to be the key word, key mantra for success for 2023, made the shares jump, by 15% after earnings. So let's look at Meta. So they are, yeah. They closed 14% up. So close to around 210, 212. Now they're trading at 240. So that's all on the Meta side, and which was the last topic for today. I can hang around for another 5 minutes. Any questions? Stocks, bonds, T-bills? Any general questions? We can talk about it. Just don't ask me for financial advice or a medical advice. Other than that, we can talk about anything else. Any trade? Anyone want to share any new ticker you added to your portfolio? All right, looks like you all are also tapped out. So I won't hold you guys here. Thank you very much for joining. Boeing. Yeah, Boeing results were also great. Sorry, I shouldn't say the results were great because I didn't follow the results, but the stock performed better after earnings. And I believe that is because, it went up, then came down. That's different. I think the headline that I heard, I didn't go into the details of Boeing, but the headline that I heard was they still reaffirmed their delivery numbers, right? Even though, if you recall, the Boeing fell down from from 213 to 200, less than 200, on the news that they found one of their suppliers notified them that the back, I think the rear tail, the way they attach the tail to the fuselage, in some of their plants, the non-standard manufacturing processes were followed. And so Boeing had to put those, new planes that they were about to ship on hold, go through whole inspection, see what the impact of that would be. And that the market thought, gosh, they're not going to meet their delivery targets. But Boeing came and reconfirmed their delivery target. So market really liked it. X is UX Steel. Not been in And maybe let's look for UX Steel. I've never traded this stock. Probably I might hold it through ETFs. Let's say US Steel investor relations. Let's go there. What? Healthy market drop. HRC hot rolled coil prices. So the prices are up. Does it show up in the revenue or not? Okay, financial performance. Where's the revenue? They talk about EBITDA. They're talking about 25 million investable free cash flow. Liquidity is 5.2 billion. I thought this company is much bigger than 25 million free cash flow and 427 million of EBITDA. Where is the revenue number? Did I miss it? Or the revenue is not that great that they are not putting up upfront? They're talking about their order book. They're talking about the price of hot rolled coil. So hot rolled coil is when you create a steel and then you roll into those coils, things like this. These are called hot roll coils. There are two processes, hot roll and cold roll coils. So there we go. Earnings, segment EBITDA, earnings, flat roll, minimal EBITDA. I hate this guy. So come on, they can't get around by, okay. In 10K, they would have had their revenue. They can't get around, but not. Oh, there we go. Income statement. Oh, so there's no comparison though. Okay, so overall net sales is 623 million. So it's not that big a company when it comes to sales. So 623 million, then that is, what am I missing? Oops. Either it says income statement. Oh, no, in millions. So that will be, oh gosh, what, 6 billion? They are making me use my head. 623 millions. What does that makes? I think, whatever. So, oh, just wondering about commodities in general. Commodities will be dependent on what China does. If China reopens, the China reopening becomes, as good as what we think, then the commodities will do better. That's my only thing. I'm not big into commodities, so don't track this. But will that be better for US Steel? That we can't say. That overall commodity story is again China reopening, which we haven't seen played out just yet. We thought it will, but in the last 1-2 quarters, China had another round of their COVID wave and all that stuff, and we haven't seen China coming back up so strong. I think China also released their GDP numbers. They were, of course, better than US. I don't recall what the number was, but that wasn't, that they blew it out of a park. By the way, I don't know if I shared or not. I started my career in a steel mill. So this does give me a little bit PTSD. FCX for copper is still good for EVs. FCX is the biggest and the most profitable. The publicly traded stock. from a copper perspective. But again, this is a commodity, will go through its own commodity cycle. We will need, may not be just not for EVs, but more, I think the copper role is more from overall electrification perspective. If you want to play only on the EVs, then the batteries would do a lot more, have got a lot more correlation with the EVs. Dave, oh wow, yeah, I spent 6 months in the steel mill working in various departments, and then I was in their consulting division, but I used to go and travel, and I've faced those big lateral blast furnaces and, hot ingots, and some of the areas where if you work, you actually get paid something called a hazard pay. Hazard pay is almost 50% of your base income. So because, there's so much of a pollutant in the air. There's something called a coke oven battery where you burn the coal and create a coke out of it, which is then used to melt the steel. So in the coke oven steel coke oven batteries, after 6 months, your lungs will be all choked with the black soot. As an IT, I was not an IT consultant. I was an instrumentation engineer in the steel plant, but I was a part of their consulting division, wherein we would go and implement, let's say, some automation systems. So I worked on some Honeywell automation systems, Allen Bradley's, those were the days. ABB's systems. Ramesh has Ranchi Steel. So Ranchi has got this consulting division. That's where I spent 18 months. My initial training was in the steel plant, which is in Bokaro, but I spent 18 months in that Ranchi. I'm an industrial engineer. No, I was an instrumentation engineer, and I loved that space. Okay, so here's a little bit history, right? Guys, we're just gonna riff. So if you want to drop off, just drop off. My first job out of a college was in a tech company, and from my training or from my education, I was an instrumentation engineer, and I loved that field. But I also had other job in my hand. But I said, let me go and try that company. I sat through their training, and only thing that they talked about in the training was networking. I was like so boring. I'm like, gosh, how will I survive in the IT industry? And I'm like, leave it. I had another offer in hand from for this steel company where my role was instrumentation engineer. I'm like, I love that. I want to go there. I went there, joined them. 6 months I spent on a steel plant. Another 18 months I spent in an office in their consulting division. And during that 18 months, that's where I actually got my hands on computers, right? And then I realized, whatever heard about IT on this networking and cable, that wasn't the whole IT. This is the stuff that I like it. And then me and one of my other colleague, he was a little more ambitious. He also wanted to do something more. So we started doing post office hours. We used to spend time and learn about computers and all that. And then slowly we started picking up some projects here and there for other departments. My own department head didn't like it, but I said, I'm doing it after office hours, right? Why do you bother? And that's when I decided, gosh, I need to change my career. I think it's only when I got my hands on, I could actually see how some of these IT projects could make an impact in day-to-day life of a librarian. The librarian over there had a register to note it. I mean, we could automate it. And so we did a few projects then I decided, because this is going to change this IT, etc., is going to change how we operate. I want to be in this sector. And then I moved. Right now, I'm in a fintech. Yes, I joined 2 weeks ago. I joined a banking as a service company. We have a platform to connect banks and the fintechs, as you may call, and we provide them a services of, let's say, if you're a insurance, not insurance, already financial service. What can I talk about? Let me talk about one customer without naming the customer. So there's a customers of ours who are focused on pet businesses, right? So they're the customers ours has a pet business, online pet stuff, stuff for pet. They sell stuff for your pets, goods, and all that stuff. And then they also wanted to offer offer them a debit card, which if they use to buy the goods on their website, they got better discounts, right? So now that customer their main business is pet. They don't want to be in a business of, figuring out what's the right way to offer a debit card or have a team which will do that. So they partner with companies like us and they say, we have a problem, we want to offer a debit card. So we have a slew of a list of banks that work with us, and we basically take the profile of this customer saying, guys, we have a customer who want to offer debit card. Are you good with this? And we do our own due diligence, how much revenue you have. If you are a startup, how much money have you raised? We do a KYC, KYBs, work with the bank, and then we partner. When I say partner, that means when a bank say, yeah, I'm willing to work with this fintech, then on our platform, we enable the fintech, or in this case, a pet company, to basically offer debit cards to their consumers. So they can say, we want debit card, then we will run the whole KYCs for the consumer. We will also run the whole fraud and AML. We'll do everything that is required to be done from a regulatory perspective. So the whole regulation burden, you have as a pet company, you don't have to bother about it. From a bank perspective, hey, you got an additional source of revenue without doing much work, because we will give you all the tools. If we find out any transaction is out of a normal, we'll highlight this, because banks are still responsible for AML, but they can then go and review the case and all that. And banks just earn interchange money, right? So that's the model. So we help normal businesses offer financial services to their end consumers, and we act as a matchmaker between these normal businesses and the banks, and our platform enable them to do it. Cool. Yeah, so that's my new gig. I just started 2 weeks ago. All right, I think that's all then for today. Thank you, everyone, and we'll talk again next week. Yeah, hold on. I am traveling, not next week. Yeah, next week I'm here, but week after next, I'm actually traveling for business, so won't be around. I will cancel that session, but see you all next week. Goodbye.
Thanks.
Thank you. You're welcome.